The 2025 currency shift. Why the Iraqi Dinar, IQD, and Vietnamese Dong, VND, could be on the verge of historic revaluation. Welcome back to the IQD Global Intel channel. Today's briefing could be among the most consequential updates we've ever shared with holders of the Iraqi Dinar, IQD, and the Vietnamese Dong, VND. For more than 10 years, people across the globe, from casual currency enthusiasts to institutional investors, have followed the possibility of a revaluation, or RV, of these two currencies. The RV idea has sparked hope, debate, endless speculation, and admittedly, frustration when rumors didn't pan out. But what is unfolding in 2025 feels different. This moment may carry a significance unlike anything we've seen before. Why? Because this time, the signals aren't limited to speculation or internet chatter. Instead, we are seeing signs of readiness embedded in the very infrastructure of the global financial system. When major banks, regulators, and international institutions begin adjusting their systems and protocols, it suggests preparation, and preparation often precedes change. In this deep dive, we'll explore what makes the current moment so extraordinary, the three fundamental pillars that support the case for revaluation, the quiet moves banks are making right now, and the potential global consequences if the RV indeed comes to life. A decade of waiting and watching. The idea of an RV has been circulating since the early 2000s, particularly after Iraq's political and economic restructuring. Over time, the discussion expanded to include Vietnam, which has experienced remarkable economic growth, yet still maintains a currency widely believed to be undervalued. Over the years, countless claims of "it's happening tomorrow" or "this is the week" have flooded online forums and social media. Inevitably, many of these turned out to be false alarms. That history has created both skepticism and fatigue among investors. But here in 2025, the tone of updates is markedly different. The sources now surfacing include insiders from international banking networks, financial technology experts involved in system upgrades, and policy watchers following Iraq and Vietnam's official monetary decisions. While no one can put an exact date on such a monumental shift, the alignment of signals suggests something is closer than ever before. Why this moment feels different? So what has changed? 1. Consistent insider reports. Multiple credible sources confirm that major U.S. and global banks are quietly preparing for exotic currency transactions involving IQD and VND. 2. Infrastructure upgrades. Banking systems are being modernized, a process costing millions, to accommodate large-scale currency exchanges. 3. Policy momentum. Iraq and Vietnam continue to implement reforms that strengthen their economic fundamentals and credibility in the global marketplace. Individually, any of these developments might be dismissed as background noise. Together, however, they paint a picture of readiness. The three pillars of the RV case. For years, the rationale behind a possible revaluation of IQD and VND has rested on three main arguments. 1. Iraq's resource wealth and economic stabilization. Iraq sits atop some of the largest proven oil reserves in the world. In theory, this gives it the capacity to support a strong national currency. The challenge has always been instability, from wars to political turbulence to inflationary pressures. Recently, however, Iraq has made notable progress. The Central Bank of Iraq, CBI, has pursued monetary reform, inflation control, and steadying the dinar. Foreign reserves now reportedly exceed $100 billion, giving Iraq a cushion to defend its currency. Efforts to diversify the economy, invest in infrastructure, and open doors to foreign investment are underway. These steps give the country financial credibility and the foundation needed for a stronger exchange rate once global recognition is triggered. 2. Vietnam's manufacturing surge. Vietnam has become one of Asia's most dynamic economies. Over the past decade, its low labor costs, strategic location, and trade agreements have made it a magnet for global manufacturing investment. Multinational corporations from the US, Europe, and Asia are building operations in Vietnam. Free trade agreements with partners such as the US and EU give Vietnam an edge. Its GDP growth has consistently ranked among the fastest in Asia. Yet the Vietnamese dong remains pegged at levels that many analysts consider undervalued. Adjusting the exchange rate to better reflect Vietnam's true economic weight could create major opportunities for both the nation and foreign investors. 3. Historical precedent. History shows that countries often revalue their currencies after recovery, reform, or restructuring. Examples include Germany and Japan after World War II, which rebuilt their economies and saw stronger currencies follow. Numerous smaller nations that realigned their exchange rates after overcoming crises or implementing reforms. This precedent fuels the belief that Iraq and Vietnam could follow a similar trajectory, especially as both nations continue to strengthen internally. Why the banking world matters now. The biggest development in 2025 comes not from government statements but from the banking sector. Sources indicate that Wells Fargo, a U.S. banking giant, is preparing behind the scenes for potential surges in exotic currency exchanges, particularly IQD and VND. These preparations involve three main areas. 1. Digital infrastructure. Banks are upgrading their back-end systems to process large-scale currency exchanges seamlessly, integrating with global FX networks and ensuring rapid settlement. 2. Specialized staffing. Selected employees are reportedly being trained to handle high-value exotic transactions, which require stricter protocols than typical USD/EUR exchanges. 3. Compliance upgrades. Anti-money laundering, AML, and Know Your Customer (KYC) processes are being strengthened to handle potential large-scale redemptions. Why does this matter? Because banks do not spend millions of dollars upgrading systems and training teams just in case. These moves usually mean institutions are anticipating demand. And Wells Fargo is not alone. Industry whispers suggest JP Morgan Chase, Citibank, and HSBC may be taking similar steps. When multiple Tier 1 banks move in alignment, it strongly signals that something significant may be imminent. What an RV could mean for Iraq. If the Iraqi dinar revalues, the implications for Iraq are enormous. Foreign investment boom. A stronger dinar could build confidence and attract institutional investors into oil, gas, agriculture, and infrastructure. Infrastructure development. A higher currency value means greater purchasing power, allowing Iraq to accelerate spending on roads, power systems, education, and healthcare. Improved living standards. A revaluation could increase the purchasing power of Iraqi citizens, reduce poverty, and stimulate domestic businesses. In short, a revalued dinar would give Iraq a stronger foundation for long-term stability and prosperity, which in turn would reduce regional risks and promote growth. What an RV could mean for Vietnam. Vietnam, already a rising economic star, could benefit in several ways. Trade leverage. A stronger dong would allow Vietnam to negotiate trade agreements from a more powerful position. Technology adoption. Higher currency value makes advanced imports, machinery, robotics, digital infrastructure more affordable, helping Vietnam climb the manufacturing value chain. Middle-class expansion. A stronger dong would increase purchasing power for citizens, boosting domestic consumption and making Vietnam an attractive market for global brands. This trajectory could solidify Vietnam's role as a global manufacturing hub and elevate its position in the Asian economic landscape. Global ripple effects. The potential impact of an RV extends far beyond Iraq and Vietnam. It could trigger ripple effects across global finance and geopolitics. Diversification from the USD. While the US dollar will remain dominant, stronger emerging market currencies could encourage diversification in trade settlements. New investment opportunities. Markets that were previously overlooked could suddenly attract global capital inflows. Currency realignments. Other nations with undervalued currencies may face pressure to adjust as well, leading to broader shifts in exchange rate dynamics. Geopolitical stability. A more prosperous Iraq could stabilize the Middle East, while a wealthier Vietnam could strengthen Southeast Asia. Risks and challenges. Of course, an RV is not without risks. Inflationary shocks. Rapid adjustments can cause short-term price spikes. Regulatory hurdles. Governments and banks must navigate strict AML and compliance requirements. Market turbulence. Currency traders may create volatility during the transition. Yet if executed with proper planning, transparency, and coordination, the rewards could outweigh the risks. Key indicators to watch. For those holding IQD or VND, vigilance is essential. The RV is unlikely to be announced with mainstream fanfare. Instead, look for these signals. 1. Official announcements from the Central Bank of Iraq, CBI, or the State Bank of Vietnam, SBV. Watch for terms like exchange rate alignment, monetary reform, or sudden adjustments in trading bands. 2. Bank memos or updates. Training documents, appointment systems, or public notices from major banks could signal readiness. 3. Forex movements. Sudden, dramatic changes in the exchange rate across multiple platforms would be a strong sign. 4. Regulatory statements. Watch for language from the IMF, World Bank, or WTO about currency realignment or financial modernization. When multiple signals align, that's when the RV is most likely moving from theory into action. Final thoughts. After more than a decade of anticipation, the RV discussion in 2025 feels different. Iraq has strengthened its economy, Vietnam is thriving as a manufacturing giant, and banks around the world are quietly preparing. The convergence of these factors makes this moment more credible than any before. No one can pinpoint the exact date or hour, but the signs suggest we are closer than ever. For IQD and VND holders, the takeaway is simple. Stay informed, stay prepared, and remain patient. If the revaluation unfolds as many now believe it could, this will not only reshape personal fortunes, but also mark a turning point in the global financial system. Thank you for tuning in to the IQD Global Intel channel, your trusted source for research-driven updates on global currency developments. Are you ready for the RV? Let us know in the comments below, and don't forget to like, share, and subscribe to stay ahead of the curve. Disclaimer: all content provided by IQD Global Intel is for educational and informational purposes only. We are not financial advisors and do not provide investment, trading, or banking advice. Viewers should always conduct their own research and consult with a licensed financial advisor before making any financial decisions.